With us through the close, Stuart Freeman, Chief Equity Strategist at Wells Fargo Advisors. Stuart says this market has moved further and faster than rebounds from both the 1973 to 74 recession and the 1981 to 82 recession. His earnings target for this year, $76 a share with an S&P target range of $11.75 to $1200. Stuart, so with all of that as the backdrop, let's kick it off with you. So in terms of this rally, I mean, are we just going to kind of see big moves up, big moves down, depending on the news flow? Because I think, what are you looking for? S&P today, we said 1,200. We're pretty much at it.
Yeah, we're at it. We've been above and below it off and on for the last few weeks. And, I think could we move higher? Yes. I think, though, it's very possible, very likely that we'll be in this range as we get into the back half of the year. But so I think we're going to see more consolidation, a lot more volatility this year, and more muted upside than last year.
What is why the lack of bullishness here? If you look at what's happening to earnings, you got to expect companies to beat this year over $85, maybe $88, and then next year maybe $100. Isn't the S&P worth $1,500 at that point?
Well, if you believe $100, I mean, we're thinking really you're more likely to see a number in the $86, $87 number next year. We had a big move. We had an 80% move in the market as the street earnings moved up $20 or $25 over the course of last year because estimates had been so low. And so now we're looking at tweaks in earnings estimates, I think, more than we're looking at those significant changes. And also, as we look at the back half of the year, I think investors are going to be thinking a little bit more about what happens with liquidity, what happens with tightening around the world, and how countries are going to be trying to slow growth in some parts of the world, although we don't think the Fed itself will be raising rates anytime this year.
I know you kind of cut your teeth really in the healthcare industry, so it's a little bit different, but you could have a similar situation here. They've got a huge problem, the oil industry now, with offshore drilling because of this horrible disaster. Some people are saying now we're going to see the big integrateds separate themselves from offshore drilling. Does that make sense to you?
Well, I think it's something that may happen. I wouldn't be so certain that we're going to see that happen. I think there still is growth opportunity in that part of the energy industry. We're not actually overweighting that segment at this point, but we see a lot more weakness in this marketplace based upon this accident. These stocks are going to start to look pretty interesting again.
Ask you, though, about the economy, because we did get some upbeat news today. I mean, Stuart, in terms of the economic fundamentals, does it make sense for investors to continue to put money into stocks at this point? You're kind of a little bit cautious here, but why not? Because it seems like the economic fundamentals get stronger and stronger and stronger.
Well, I can't disagree with that. It's early in the cycle still. The numbers are coming through well. The breadth of earnings is good. In fact, more companies are showing up earnings year over year. The breadth of the market is good. And I think the breadth of earnings as we go forward the next couple of quarters will be even greater, even though the percentage increase in earnings is going to slow down year over year because the comps are going to get a little bit more difficult. But so why not
be more upbeat in your forecast? Because you're looking at 1,200 for the end of the year on the S&P. That's where we are. Why not be more upbeat? Just quickly.
Well, I think the numbers we're seeing here were in the market, some time ago, several months ago. I mean, the investors started to increase their expectations for earnings this year, starting really a year ago, and increased dramatically from that point. And so now we're looking at some numbers. They're getting tweaked up a little bit, but we also have other uncertainties and the question about worldwide tightening coming and other things at the back end of this year. That being said, we're not saying we're not in a bull market. We do think we'll get a second leg up after we get through this consolidation period.
All right. Hey, Stuart, thank you so much for joining us. Stuart Freeman there.